Broadcasting live from the Subaru of Gwinnett Studios in Atlanta, it's time for Silver Lining in the Cloud, brought to you by Computer Design and Integration.
Good morning, everyone, and welcome to Silver Lining in the Cloud, where we talk with business leaders from Atlanta and the surrounding communities. Silver Lining in the Cloud is brought to you by CDI Managed Services. That's Computer Design and Integration, CDI and CDI Managed Services, where we outsource IT solutions, infrastructure support, and cloud computing. I'm Dominic Rainey with CDI Managed Services, and I'll be hosting today's show. We have two great guests in the studio this morning. First, we'll be speaking with Brian Peart. Peart. Sorry about that. That's Brian Peart, who is president of Commercial Capital. He's located in on Athens Highway in Loganville, right?
That's right.
Okay. Mm-hmm. And then we'll be speaking with Dawn Poplawski, and she is the founder and CEO of PCC Innovations Solutions, located right here on Satellite Boulevard in Swanee. Mm-hmm. Great. Welcome, both of you, to the studio, and thank you for taking the time out of your busy schedules to be with us today. We really appreciate it. And so, Brian, why don't you kick things off? Tell us a little bit about Commercial Capital and what you guys do there.
Okay. We are a nationwide commercial private lender and mortgage broker. We do commercial and business loans nationwide, and we've been doing that since 2000, and the business actually started in 95, so we've been around 20 years. And we close probably more commercial loans than I do anyway, more than almost anyone in the country.
Well, it sounds like you've seen it all, the swing in the economy, and you guys are doing something right because you're still going.
It was a tough few years there, absolutely.
Yeah, it was. Mm-hmm. But now that's behind us. So how are things going now? What's the future look like now?
Well, I'll tell you, I just came back from a conference in Miami where I spoke to a lot of the very large hedge funds and types of people across the country that are lending, in the billions and trillions. And across the board, they were all very bullish over the next 3 to 5 years, which was surprising to me. I'm a little nervous about, just the government's level of debt and everything else, but they were very bullish. And I tell you, the market's very busy right now. People are bidding on commercial properties, multiple offers. It's a very busy market. So
that's good to hear.
Yeah,
that's good. The money's out there.
The money is out there. There's a lot of money available.
Yeah, that's what we keep hearing. So things are starting to feel the positive side of that.
That's right.
Brian, tell us a little bit about why qualified loans get denied by local banks, if you will.
All right. Well, back in the day when you would look at a loan as a bank or whatever, you'd look at the borrower's credit, their assets, you'd look at the property and the cash flow of the property or the business, and you'd make your assumption that way. Since the crash or the correction back in 07, 08, the market is now heavily regulated. Banks are audited every year, multiple times, sometimes a year if they're in the troubled area. And what they're looking for, the regulators, is they're pulling files, and if they see a file that looks risky, in their opinion, they will set aside loss reserves. They will ask the bank to set aside loss reserves. So if a regulator comes in and says that $500,000 loan is risky, they may ask the bank to set aside a couple $100,000 in an account just in case that loan goes bad. So to loan someone $500,000 at 5%, they might take the risk of having to set aside an extra $200,000, $700,000. So what happens is this is all unbeknownst to the borrower. The borrower goes in and applies at his bank. The bank writes a letter of interest. He's all excited. He gets moving through. And then 2 weeks, 3 weeks, 2 months down the road, it goes to credit committee and gets denied. It's because that credit committee is looking at it from a regulatory standpoint, saying, you know what, this is a tad too risky. A regulator might have an issue with that. And according to the Real Data Analytics figures, 80% of all loans that are sent to the big banks and 50% to the local banks get denied.
Wow, that's more than I would think.
So it's not a good number, and most of the loans that I close are those loans that got denied by some bank, and then they come to me, and because of a lot of different reasons, I'm able to get them closed at the same type rates. And that's kind of where our niche is in the market, is we help clients, get closed. That's because I don't get paid unless I close the loan. So
there's a little incentive there.
That's
huh?
right.
Yeah.
That's absolutely
So
right.
is there a magical structure or something that you guys do differently that makes it happen for people?
Well, it's having access to all the capital that's available, hundreds of local banks,
Oh, okay.
lenders and stuff, and then bringing and fitting that client to the best deal. For
so
example,
you shop it, right?
yeah, but no.
No? Okay.
I analyze the loan, I underwrite it, and then I see, oh, this loan will fit with this particular lender, and so I take it with that lender. For example, there was a loan I closed last Friday. The borrower was buying a Firehouse Subs, an existing Firehouse Subs location. He had been denied by 5 different banks in the Vegas market. It was out in Las Vegas. I got him closed with a bank out of Tennessee. That bank in Tennessee, now this client had 700 credit and 200,000 in the bank. The loan was only a 360,000 loan. So he had, 2/3 of the loan amount in cash, and he had 700 credit scores. But he got denied by 5 different banks. The reason, his existing business didn't cash flow. And so because his existing business didn't cash flow, that was that one hiccup that the credit committees couldn't get past. So I took him to a bank in Tennessee that is expanding nationwide. They love they love credit. They love good credit. They had 700 scores. They love lots of assets. And they were able to look past it because the store that he was buying did cash flow. And he was paying his bills on time with the existing. So however he's doing it, they were okay with it, and we got it closed. And he's really happy.
Well, I'm sure he is.
Mhm.
Wow, putting that much up front too. That's amazing.
Well,
so you kind of
he only put 20% down,
Uh-huh.
no, 15% down for the
Yes.
purchase, but he had a lot of reserves.
which is really what you're looking
Normally
for.
good,
Yeah.
right? And no one could get it done in that market. I had to go to Tennessee and find someone.
Well,
so.
thank goodness you did for him. Brian Peart with Commercial Capital. And so how do you take the risk out of doing business commercially or, through a business loan? Is it just knowing where to go by your history?
Well, a couple things. It's what's unfortunate is the lenders that are really lending, that have the money to lend and are really aggressive, generally aren't advertising. They don't need to advertise. They've got plenty of business, and so the average client goes to his local bank, gets denied, and then he calls his mortgage broker, his residential mortgage broker, and that individual doesn't really know where to go. He's never done a commercial loan, so he's just trying. With me, because all I do is commercial, and because I know exactly where to go and I underwrite the deals myself, the client can come in. I can get them pre-approved. It doesn't cost anything. I don't charge anything. And then I only get paid if I close. So there's really no risk on the client. I take all the risk away. If I'm going to work on a loan and choose to work on a loan, I'm only going to do it if I know I can close it. And so when that client pre-screens a deal with me and I issue terms, there's an 80% chance it's actually going to close, as opposed to an 80% chance it won't, like some of the big banks.
Oh, great. Yeah.
So
Okay, Brian. So is a low rate sometimes a bad thing?
yeah,
It's like the low quote. Sometimes people shy away from the low quote, because they just feel like maybe there's something going on here.
Well,
it
it
won't work out.
It goes back to what I was saying earlier. 80% of the loans that the big boy banks get are denied. Well, they also happen to be the lowest quotes generally. So what happens is the client shopping the lowest rate gets a quote from one of those big boy banks, and he thinks he's got a deal, he's done, he goes into contract. 57% of all purchase contracts in commercial that don't close because of financing, okay? So of those, it's 81% actually are because the lender just denied him. So here's the client, he's got a great rate quote, but then he loses the property because it doesn't close, and the seller who has backup offers sells it to someone else. And now he's got nothing, or he comes to me. He's about to lose his large upfront earnest money that he put on the property, and he's only got 2 weeks to close or 3 weeks to close. Now the only thing that can close in 2 weeks is a private money loan. So now he's going to pay 10, 8, 12% instead of that 4% just to get the deal closed, or he loses the deal. So that 4% rate that sounded so great.
Set you up for
set them up
problems.
for an 8% or 12% failure rate. When the 8 and 10 chance happened, it actually got denied. So
okay. So it sounds like an investor, a potential business entrepreneur, whatever, is might want to check with commercial capital first before going to the big boys.
That's
why we're here.
I could not have said that better myself. But there's no risk to doing it. You call me, I pre-qual the deal, I underwrite it myself, and I charge nothing for it. If it's a loan I can close, I issue you terms. You don't have to take them. You can take those terms and say, you know what, I'm going to keep shopping, or you can choose to move forward because you realize that the rates are very competitive or good. So I mean, there's no risk. It's always good to get a second opinion in commercial. It's very important because of that high denial rate down the road. It's a really good idea to make sure you don't put all your eggs in that basket.
Yeah, it sounds like any prudent business person's going to get more than one quote.
If the closing matters, it's worth doing.
Yeah, is there a typical number of days that someone waits? You mentioned this lag of waiting, and waiting is the hardest part. Let's face it. The unknown. But if they come to see you first, you can probably give them a better projection in terms of the probability of it happening, right?
Right. When I get a deal, I'll pre-screen it. If it looks okay, I'll tell them the documents I need to underwrite it. Once I get those documents, usually I can have terms in 48 hours. So it's much quicker. The typical bank takes 2 or 3 weeks. I'm going to have it in 48 hours, and then they'll know. Or I'll tell them this isn't going to close because of X, and then at least they know. Now they can still choose not to listen to me, but I mean, it's going to come from a lot of experience. I close a lot of loans.
Oh, so. Absolutely. I can see that. So, Brian, what is crowdfunding? Yeah, and how does that work? I see this term crowdfunding.
Yeah,
this would probably be an interesting.
It's kind of all the rage, and what it is regulations opened up that ability for investors to begin to invest in these crowdfunding platforms, and it gets them into different commercial deals. Even if they don't really know much about commercial, they can invest in the fund, and then it's a way for people across the country to begin to invest in commercial real estate without having to put up all the money for a particular deal. There's a couple problems with it. One is it's still very new. There's a lot of people rushing into the space. It's the hot rage, and people are able to raise a lot of capital. But most of the people that are investing in there, what happens a lot is the terms change. The client comes in, he gets quoted one thing up front by the crowdfunding platform. Then they have to fill that with the different investors. And as the investors decide to go into it or not, they may say, well, I'll only do that one at a 10% rate, not an 8% rate. And so the terms can change between where they start and where they finish. Most of the loans that I've seen close with crowdfunding tend to be at a much higher rate, 8, 10, 12%, because the people investing in there think that they deserve that kind of a rate of return. And then the other danger is, it was opened up because of an act of Congress, and an act of Congress can shut it down if a lot of people start losing money by investing in these things, and there begins to be a lot of defaults. They could just take away the loophole that allowed for all that investment in the first place, and it's done. So it's still pretty early on, and you can try those different platforms, and there's a lot of them out there now. But I strongly still recommend a seasoned person looking at it with actual knowledge of the market and getting them done. They are closing loans, but the ones that tend to get to closing tend to be the higher interest rate, private money type deals.
Oh, okay.
So far,
that's what they're looking for.
So far,
it's just kind of like a syndication or something.
It
like
is
that.
kind of like a syndication.
Different kinds of terms, I guess.
But the people that are investing may not know much about commercial at all.
Looking for a return on.
They're just looking for a return. Mm-hmm.
But it's not guaranteed. It sounds like.
Well, I mean, nothing's
guaranteed, right? When it comes to money,
right?
Okay. Oh, great. I am Peart with Commercial Capital Limited, and so what types of loans do you guys do there at Commercial Capital? Is there a wide range of loans? Or do you cater to specific markets?
Kind of falls into 3 buckets. About a third of the loans that I do are SBA type loans, so the Small Business Administration loans, the loans for businesses, buying a business or buying a building or expanding. About a third of them are what is called private money loans. We do have our own private money. We lend, and need to get closer. So we lend, and about a third of them are that, and those tend to be situations where someone has to close quickly, or there's some hiccup that can't be overcome right now, but a year or two from now, they might qualify for normal financing. We provide the bridge money for that, and then the other third are the normal retail shopping center. You know, I just closed a $8 million retail shopping center in Cobb County. The borrower was putting 30%. It was a $5.5 million loan, and you know, we got them great rates. And you know, the reason I ended up with that is the borrowers were out of the state, and they were buying a property here. None of the local banks wanted to do them because they were out of state, even though they were very, very strong. And you know, we got them great. We got them, you know, a rate in the low fours, and they were excited.
Pretty exciting when you put the deal together, isn't it?
That's my favorite part, man.
You're helping people
getting those deals,
make it happen, right?
That's my favorite part.
You make it happen.
It's fun. Mm-hmm.
Oh, right, that's great. You've been listening to Silver Lining in the Cloud, brought to you by CDI Managed Services. Well, what final tips do you have, Brian, for people going out there and trying to get their funding and you know, for their business or a particular property?
You know, I think the best thing they can do is just make one call to me first, and let me pre-prove or at least pre-qualify you, give you an idea of where you're going to be and you know, what you can expect, so at least you have an idea. And you know, again, I'll talk to anyone, and you know, there's no cost to it, and it's really seasoned advice. So you know, I think that's a great first step. And then just be careful. Don't do if you do go somewhere, be careful of brokers that pretend to be lenders that are collecting non-refundable application fees. That's a big thing. A lot of people who don't close loans make a lot of money off of just application fees. They collect the money, they tell you what you want to hear, collect a deposit that's not refundable, and then they deny the loan a month or two later. They keep your money. You know, and you're left with nothing.
Great advice.
Yeah,
that's great advice. So if you can help them without just on the phone, kind of get a feel for where they're at without having to go through.
And we
that.
never collect application fees that are non-refundable. So there's no risk.
Excellent. So Commercial Capital Limited sounds like the place to go when you need a loan and when you're looking for action and something to happen in a reasonable time frame.
Yes, sir.
Yes, sir. That's great. Great.
Thank you, Dominic.
Tell us also how they can reach you guys on the web or social media or anything like that.
Okay. I don't even know the social media links, but but our website
you can get that from us.
You could Google my name, Brian Peart, Peart, or you can go to our website, www.topproducercommercial.com. Or you can call me 866-355-1244. And
that sounds great. Give Brian a call. It sounds like a great program you guys have going there. That's excellent.
Thank you, Dominic.
All right, thank you. All right, next up on our program, we've got Dawn Poplawski. And
Good morning.
Yeah, how'd they do with the name, Dawn?
Very good.
Yeah, very good. Okay. She's with, actually started PCC?
Yes.
Okay, PCC Innovative Solutions. LLC, right here locally in Swanee. Dawn, tell us about PCC Innovative Solutions and what you guys are doing.
Okay, glad to. PCC Innovative Solutions, just to kind of clarify, is actually considered a collection agency. But at the same point, I like to look at us differently because what we try to do is be more of a consultant when it comes to businesses, collections, and finance. What we do is we do collect bad debt for those companies that are having trouble, but at the same time, we like to educate them up front and basically let them know what they can do to help secure their collections or their receivables.
Mm-hmm. Yeah.
You know, so that's the main thing.
It's different.
Yeah, I'm finding that a lot of small businesses, they are good at what they do, their trade, but at the same time, you know, if something goes wrong or if they're not able to collect their money, they don't know what to do or how to go about it.
Yeah, absolutely.
So that's where, you know, the more they're educated up front, just like running any type of business, the more you know, the more, you know, you'll be successful doing it. So
yeah, absolutely. Well, you know, checking out the website and all that, it's not your typical collection agency. I was pretty surprised, and looking at the name, that kind of threw me a little bit. And,
Yeah.
when I looked in detail, though, I kind of understood the mission.
Oh, good.
Which is more than collection.
Yeah.
And that's what we're here to talk about. So, Dawn, tell us a little bit about PCC Innovations, and really, how'd you come up with the concept of making it a little different?
Oh, well, I have been in collections. I started back in 1988 doing collections for a lot of more of the construction industry. That's my main background.
Okay.
So for different manufacturing companies, supply companies, rental companies with equipment and whatnot. And over the years, I found that it was always a matter of helping and support the smaller businesses. So even though you have a contractor who comes in and he may not have a lot of capital and he's trying to develop his business, and so there was always ways that we would be able to work with them. Even though they didn't have credit, there are things that you could do to help them establish credit and whatnot. And so that was one thing that I used to handle with the smaller companies. And also just basically looking at what support they need. A lot of the major corporations, they are more entitled to being able to handle the credit investigations and whatnot, and do the due diligence as far as, checking up on things and what's a risk and what's not a risk. And so basically, the smaller businesses don't have that capability in a lot of sense. Even with the credit bureaus, you have to have so many clients or so many customers to even be able to use their services.
Yeah, different qualifiers.
Yeah.
Yeah.
And so that's where we also are kind of the middleman. So we can support that information for them and help them grow.
Right.
And so that's mainly the reason why I got into it.
Do you cater to certain types of companies or particular industries, or is it across the board?
It's pretty much across the board. It wasn't expected to be that way, but it's just because there's so many varieties of businesses, I've been sought out from these companies. Again, everything, I've been handling everything from medical collections to contractors to service providers, cleaning services, everything that you can imagine is out there, because I do everything from business to commercial and business to consumer.
Okay.
So
I'm curious, what because of that market, do people wait too long generally before they get in trouble?
Exactly.
With receivables.
Yes, and that's what I've come across when I started the business. The accounts I would get would be 2 to 3 years old.
Oh, yeah, and expect you to perform miracles.
Yeah.
It sounds. Well, hey, why not, right? So that's good. I mean, actually, I guess that tells us a little bit about, the market and when you should, when someone should call PCC Innovative Solutions.
Oh, yes. Pretty much what I educate them with is, on a typical scale, once a receivable hits 60 to 90 days, it should definitely be going on to a collection agency or something in order to get that recovered as quickly as possible.
Oh, okay. So it's not a bundle thing, you don't wait till you have so many. It's just it's a timing thing. So
Yes.
90 days is the trigger.
Yes.
That's the trigger.
Yes, and I know a lot of the larger collection agencies do business on bundle basis, and that's where with the small businesses, they don't have that many issues. So, they may have 1 or 2 clients that are customers that they can't collect from. And so that's where I will take on just, individual accounts and whatever their need is.
Well, this is interesting. Brian gets the money for them, and you get the money for them after they've, realized they can't get the money. So it's an interesting dynamic we have going here. The front end and the back end of the business sector, right?
Yeah,
That's
pretty
great.
much.
That's great. Who put this together? This is great. Great synergy,
It
All
wasn't
right.
me.
Don Poplawski with PCC Innovative Solutions here on Silver Lining in the Cloud. what are the most difficult cases? You know, when you run, I know you've got a lot of stories.
Oh, yeah.
I'm sure you can't share all of them, but what are some of the more difficult cases?
The most difficult cases, and I know this has a lot to do with the economy and whatnot as well, but I'm finding that it is with the consumers more so than the businesses that I collect from, because basically these consumers, you know, are finding themselves out of work, you know, or having hardship. And sometimes you are going to come across those that are just trying to scam someone. And most of it was with actually property management companies. They're having the worst time.
Oh, okay.
And
Okay.
because what I'm finding is they're evicting their tenants, and then, of course, there's back rent they're trying to collect.
Oh, right.
Well, the main thing with that problem is right now they don't have a place to live, so you have to turn around and try to find them.
So
And-
there is a law. There is some legal aspects of it that
Oh,
people
yeah.
don't think about.
Oh,
They just
yes.
want the money.
Oh, yes.
Yeah.
Oh, yeah.
So
And so, you know, and those usually take the longest, because then, of course, you are having to wait for them to establish a residence and whatnot, and or employment, if that's why they couldn't pay their rent in the first place. So it's really hard to go after something that's just not there. You know, so that's the most time consuming.
when do you give up? I mean, when you're trying, you know, what
Yeah, how do you find them?
Brian and I are thinking of. along the same lines.
How do you find them if they're, you know, not living somewhere? What do you do?
Well, and that's where I'm saying a lot of that takes time, because to answer your one question,
We've got a lot of questions.
you don't stop unless it's completely dead, basically.
When is it dead?
Well, unfortunately, I've had some pass away.
Well,
So
let's be blunt about
I
it.
hate to say that, but
You-
yeah.
You can't get blood from a stone.
literally
Exactly,
dead.
exactly.
I love it.
And if there's no estate, they had nothing to begin with, and so you know, there's nothing to pursue.
This is why Silver Lining Cloud is such a popular show, because you know we're very transparent, very very upfront, and we just say it like it is. Here,
Okay.
you know? Very very well said.
But then I was going to say, to answer the other question, I do utilize the credit bureaus. So again, that's how I use, you know, I benefit from them because I can do the research,
Okay, okay,
and that's how I try to find them
okay, great.
to go after.
Well, that's excellent. And how long have you guys been doing this as your own business?
I started the business in October 2014.
Okay, so it's a fairly young company,
Yes, it
but
is.
you're over the hump and you're
Yes.
going strong. That's
Yes.
great. That's great.
It's
actually.
yeah.
So do you cover more markets than the local market here? Do you go out of state?
No, all my clients are here in Georgia,
Okay.
and I do hopefully eventually will, you know, grow out of state. But pretty much because there's been such a response to what I do and what I offer, right now the business is very well. So I've got to grow
Okay.
with personnel
Okay.
as well in order to extend that market.
Absolutely. Duplicate it.
Yeah,
Duplicate it.
exactly.
Duplication is one of the keys. Well, that's good to hear. And Don, what you've got. Let's get away from the collection side, because you've got you are different. You've got value added services. Can you tell us a little bit about how you work with companies to help them prevent getting into a receivables problem and other services that you offer?
Of course. Yes, and this is my main focus, more so than the collections, is, again, I want to educate these businesses on what they can do. So pretty much our process is we go in and we meet with different companies, and we find out what they are doing, and, you know, basically look at their policies and their terms and determine why they're having issues as far as any, you know, receivables or people not paying. And basically we kind of go take a look at that, and then we set up a plan for them to follow, which will help them improve that situation.
Okay.
And again, whether it be a lot of clients I'm finding in their contracts, in their initial contracts, they're not stipulating the grounds that they plan to proceed with. For instance, collections. You typically have to have that in your contract if you plan to charge interest, late fees, and whatnot. And so there's a lot of verbiage that's not there. So as far as going after that money too, you're limited, because you have to, by law, you have to have certain things stated. And I'm probably getting a little off the subject, but pretty much, I mean, it's a long, big scale.
It's a broad, I get
But,
you.
and also to do this education, I do have seminars,
You have some workshops coming
Yeah.
up, right?
I actually have a workshop next week that's going to be offered. And, well, it is offered. And basically what that's going to cover is everything from the contracts and their credit policies up front, and how to handle the verbiage that needs to be in place. And also for those companies that want to do credit checks and whatnot, you have to have that in your contracts as well, because legally you can't run a credit report unless you have that customer's permission. So there's a lot of little details like that, and what they can do as far as following the Federal Debt Collectors Practices Act. So, there are certain guidelines that they need to follow. You can't just call up somebody and harass them, because now they're protecting the consumer more than anyone.
Right.
So there's a lot of things that they need to know.
Yeah.
You
yeah,
can't.
and you can advise them on
Yeah,
all those,
exactly.
on all those
So-
areas so they don't get in trouble.
Exactly.
Yeah, that's great. Another reason to call PCC Innovative Solutions. Gosh, this is a wealth of knowledge here today. So, do you have to? How do you qualify to come? Do you have to be a client to go to the workshops? Is this open to the?
Oh no, it is open.
How do
It's
you-
just through my website.
Okay.
It's www.pccis.com, and there is a link there for the event, and they can just register online. It's only $58, and lunch is provided. So it's at the 1818 Club. So that's where it's located.
That's a good lunch.
Yeah,
That's
exactly.
a good lunch. 1818
Exactly.
Club, right above the Chamber of Commerce, the Gwinnett
Yes.
Chamber.
And
Very great place to be.
yeah. And even as the resource, there's also a workbook. I have put together a 45-page workbook, so they have that as a reference guide that they can always go back to. Anything, any information that they need and whatnot.
Documentation's always good. Always good. So, what are the plans for the company in the future in terms of growing it? Sounds like you're on the cusp of doing something big like that.
Yeah, I hope so. It feels like it anyway.
It sure
But
does.
yeah, I do want to try to go both global, and an international.
Go ahead
I'm
and
sorry.
dream.
Go ahead.
Go ahead and dream.
Heck yeah.
Tell us the dream.
Well, and kind of getting on the base of what Brian was talking about as far as investors coming in from other countries. I have that now with a lot of my property management companies. The owners aren't in the States. They're putting money into these local, commercial buildings and residential. And
Yeah, I understand there is a lot of international money in Atlanta, especially on the real estate side.
yes.
And I don't know where it's all coming from, but I know there's certain sectors that find Atlanta very attractive.
Exactly.
for-
And the property management companies are the ones that I'm working with.
Okay.
But at the same time, it's the owners that I have a contract with, because it is their money, it's their property.
Yeah.
So, and that's where, I'm like, well, I could utilize Brian and send him out and get more out of
Ready
country.
to
I knew
expand
that was.
Oh,
there.
here's
I
his
knew that was
business
going to
card.
happen. Another match made here on
Yeah.
Silver Lining in the Cloud. That's great. Great synergy. All right. Anything else we need to know about PCC Innovative Solutions? What does the PCC stand for? I got to ask you.
Okay. Well, I provide credit and collection solutions.
Yeah. Very simple.
Very simple.
Very good. And again, Don, tell us how our listeners can reach out to you to, go to that workshop, if nothing else, and have a great lunch there
Oh,
at
yeah.
the 1818 Club. But what's the best way to reach you guys and get a feel for your company?
Okay. Again, you can check our website. Again, it's www.pccis.com. And the number is 770-605-3675. 3033. And you can even reach out by email. That's client support at pccis.com.
Excellent. Very good. Well, you've been listening to Silver Lining in the Cloud, where we talk business to business, and we want to thank our guest today, Brian Peart. He's with Commercial Capital Limited, and Don Poplawski with PCC Innovative Solutions. We appreciate you both for spending the time with us today to get the word out about your companies and everything you do here for the Atlanta community, employment, and all the good things that come out of the entrepreneurial spirit, and we appreciate that. On behalf of our sponsor, CDI Managed Services, I'm Dominic Rainey, and it's been a pleasure to host today's show. To listen to this show and other Silver Lining in the Cloud broadcasts, go to silverlining.businessradiox.com. And until next time, remember, when it comes to outsourced IT support, migrating your company to the cloud, CDI Managed Services is your Silver Lining in the Cloud.